Hey, it's Thursday, April 11th. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! Boom shalakalaka. Hey, good morning. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you haven't yet joined our family, please visit TradersWay.com. Open up a demo account, at least a demo account. Start there. It takes 30 seconds. Then when you're in your back office, download MT4. Then come back to this video, and just below the video is a download link to download my MT4 charts, templates, EAs, indicators, all the pretty colors, all the pretty profiles all put together, probably 100 different things for you. Absolutely for free. Thank you. Compliments of the firm. Thank Traders Way. Also, don't forget to subscribe. If you subscribe to the Forex.Today YouTube channel, then when I click go, you're invited, which is probably why you're here right at this moment if you're a subscriber. So if you're not a subscriber, please subscribe. Also, thank you for the feedback. Comments. If you want me to cover a particular exotic pair or something, put that in the comments of yesterday's video. I get those. Pa-ching, pa-ching, pa-ching. So do all that. Without a further ado, let's move on to the charts, huh? All right, so yesterday we ended the webinar talking about oil. Let's go back to oil and see what's up. See what's up. Sup, oil. All right, where's my little magic little drawing tool? Hang on, I lost my little drawing tool. I got the new one, so I got to figure out where the turn on button is. Where's the on button? There it is. All right. Haven't had a cigar in days. All right. We talked about WTI specifically, and this is WT right there. WTI. Whoa, that's getting funky. There we go. Right there, WTI. We started a planning process, a trade planning process with a hypothesis. The hypothesis becomes strategy. It becomes strategy. Hypothesis isn't strategy, it becomes strategy. So the hypothesis is, what if this area is the high for April? Yeah, isn't that neat? We're not just talking about the high of the day or high of the week, the high of the month. What's up, hoodoo? Okay. What if, pray tell, question mark, that is the top of April. It could do this. It could do this. It could do this. It could do this, and then come down. It could roll over, right? We don't believe it's going to head straight down. In fact, I think I had it coming down to the 21, then back up, and then back down to the 55, and then probably back up, and then, right? So this creates a double, triple top, and then a double triple top, triple double, double triple, triple double, triple here first, then the double, and then down to the 200, basically, right? Now, that's interesting because, well, we do want to see something similar on Brent. And this doesn't bother me too much. This is what we call an Arctic turtle. And I think Brooke was talking about this. He was setting this up. But anyways, up in here, down, right, we're going to have to get through the 21, and that just sets us up for an H&S, head and shoulders. Right? Ends up being the same thing, reversal pattern, whatever. So that's whatever. That's the hypotheses. What if this is the top and it comes down from here? Okay, cool. That's a hypothesis. So we said that might be bad for countries that benefit from selling oil. Can you think of 2 countries that sell oil? Don't say US. Don't count us. Is it right, Brooke? Happy birthday, bruh. Saudi Arabia, okay. Canada, okay. So we'll call this North American oil. NA oil. So that wouldn't be good for Canada. Angola! Russia and Canada, yeah. France, sort of. I don't think France has that much oil. Denmark, Norway, that's the one I'm going for. So why don't we say this is European oil. It's actually sort of North Sea oil, a little bit of UK, a little bit of Europe, but anyways, we'll boil this down to CAD and NOK. You see? Slovenia has oil, is that right? Happy birthday to Brooke. Happy birthday to Brooke. Happy birthday, dear Brooke. Happy birthday to Brooke. Yeah. So anyways, you can boil it down. If oil drops, then maybe this drops. If this oil drops, maybe that drops. That's how you might want to play the energy complex. Right? And why do you call it the energy complex? To impress the ladies. Make you look smart. Make your mother proud. My son, he's so smart. So anyways, so why don't we follow our hypotheses and see if there's any weakness overnight or potential weakness in the near future for both NOK and CAD. Well, we did CAD yesterday, so why don't we, I don't even have a NOK. What do you want to do? Let me just pick a random currency. I don't want to do dollar though. Well, I don't like Euro Kiwi anyway, so. All right, so let's do this. Noki, noki, noki. All right, noki, noki, noki. Do we want to do a noki dollar? Nope. Nope. Probably not a lot of choice anyways. Zarzar. Gold and silver. Peso. Try. Sec. Nope. Pound NOK. Euro NOK. Good enough. Is there any other NOKs? Norwegian krona. If you're wondering what NOK is. Nokia. Big Nokia's finished, dude. Yeah. I know. All right. So we're looking at what if Brent prices fall from here. Remember, they haven't actually fallen yet. Only technical analysis has told us they might begin to fall. So therefore, what would we see here? Well, NOK is on the right. So if NOKI is falling, if Norwegian krona is falling in value versus the pound, it would go up. If NOK is on the right, so if Norwegian krona is falling versus the dollar, this will go up. NOK's on the right, so if Norwegian krona is falling versus the euro, this will go up. So now we have a strategic plan. Okay? So now, if this is going up, we need to look for reversal patterns like double bottoms with 1, 2, 3s, like inverse head and shoulders, like crown patterns, whatever you want, or 2155 crosses, MACD crosses, whatever floats your boat. Okay? Whatever floats your boat. Cool. So let's make sure we got this on proper time frames and stuff. So 15 minutes, not going to really do it. Let's look at it maybe hourly, I guess. Okay, and we're going to need to look for clear signs of support and resistance. Let me update these with a better template. Isn't it nice you have templates now? Proper happy templates from Wayne. Templates, proper templates. All right, go. Up. So let's now fold in some technical analysis. Is this a place we might see some up, euro versus NOK? Keiko, I downloaded them 3 days ago, installed them behind me, and they worked perfectly. You might be using MT5, installing MT4 templates. I don't know. Maybe you're not using Trader's Way, and then, well, that's at your own peril. But I'm really not sure, sorry. Yeah, Simon, read about that. Okay. So what do you think? Am I still bullish on oil? Well, not at those levels. Remember, there's a price for everything, right? So what I said yesterday, guys, in regards to oil, is that we're at a place where you're just supposed to take profit. And I said, it's going to be difficult, but if you have the discipline, you'll just take profit. Doesn't mean I'm a bear. It just, have to know when to walk away. So I'll buy back later. Okay. Okay. So let me ask again. I didn't get much of a response. Is this a proper place to see euro gain versus the Norwegian krone? Nah. This one here, the one with the arrow. Is this a proper place to expect some up, even though it's been down? Check this out. We started Sunday afternoon at WM3. If you're a bear, that predicts green zone as an exit. Beautiful. Thank you, pivot points. I love you, pivot points. Looks like quite a few people say, yep, and that is right. Yes, it seems plausible. Well, this is where, what we know is this is where bears exit. That's what we know. So maybe if you got a double bottom, remember all those patterns I said you could look for? Double bottoms, 1, 2, 3s, inverse head and shoulders, inverse crown patterns, whatever. So you got the basis of a big maybe, right? Well, that's where it all begins, my friend. Don't forget to identify the next level of resistance because we know bears are going to live there. Okay. Going back to look at this one, on Sunday afternoon when the market opened, we were at weekly M3, monthly CPP. If you were already a bear, is that a sell for you? Yeah. Well, Kago, maybe you're just not installing them properly or something. I really don't know. Go to Fiverr.com, pay $5, have someone install them for you. That's what I do. Yeah, so if you're a bear, you definitely would have sold that. Absolutely. The funny thing is, your target was here. Okay? This is actually a reload. Okay, and that's why we got down into here. Okay. You would have actually expected this to come up back up, but it's just so bearish. But, okay, with all that being said, can we plan maybe an up at this point? Maybe if it does, you know, that, and this is doing what we wanted it to do as well. See, the congruency is really important, right? Okay, market opens, central pivot. If you're already a bear, you would have sold that. Your target based on that entry is this price. Cool, right? Not this price. See, this is this price I did over here because we started at M3. This is the target because we started at CPP. So anyways, are we in a position now or at a proper price to start maybe looking for a reversal pattern? Very cool. Yeah, Keiko, yeah, apologize, I can't help you, but it looks like we have a full community of people willing to help you. That's really cool, guys. Namaste. That's really cool. Euro Swissy? Yeah, maybe. J-Bone says probably hammock and stuff. Yeah, cool. Right on. All those are possible. But the thing is, we're trying to anticipate it before it's happened. Using a combination of long-term fundamentals and long-term technicals to set up a hypothesis, right? In a completely different market. But using correlation data, we come to this currency and we start to use technical analysis to look for something that hasn't happened, but will happen if our strategy is correct. Then we tactically enter this trade and filthy stinking rich, or profitable at least, right? Well, Ian, there's a difference between hiring someone for $5 to install an indicator into your MT4 versus fix your broken website. You should actually hire a professional to do that. pay more than $5. So anyways, lesson learned, right? Right, Ian? Come on. Kick down, come clean. Don't be a holdout machine. All right. But do you guys see it now? The process? Cool, right? That's how we get her done. Okay, so now what? Well, drop into this one. You have a strategy now. You can drop into a smaller time frame, yo. Is it plausible you've already missed your opportunity? Could be a rabbit, could be. People, happy people, meet me in the crowd. All day, all day, do, 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 do. Right? Yeah, P.S. It's not a long-term trade. You're just making money. And also, I'm just teaching how to create a strategy. We could be looking at anything and translate that to whatever correlation it's providing, right? So I'm not necessarily pointing out this particular trade. Ed, that was like 3 hours ago. If I have a lot of trades and they're not working out, well, first of all, here's an interesting thing. It's the way you phrase it makes me think that they're all like today, like you just took them all today. You shouldn't be in a lot of trades that are not profitable, right? And it depends on what you mean by a lot. Like if you're talking about 5, okay, you took 5 trades, but I try not to enter more than, let's say, 2 trades until those 2 trades are profitable. Then I might enter 1 or 2 more, right? And then if they go profitable, maybe I add a 5th one, maybe I don't, then I might be done for the day. And then tomorrow I'll try 2 more. And if they're profitable, then I'll try 2 more. It takes me a long time to build a position. So the way you phrased it makes me think like you're in like 10 trades right now and they're all losing. You shouldn't be in a situation like that. Because what you've done, maybe if this is the case, and even if it's not the case, it's a good discussion. Don't take 10 trades until your hypothesis has been proven correct. So for example, if I've made 5 trades today, let's say, they're going to be based on something like, let's say, all yen pairs going down or all yen pairs going up. But it's all the same trade. And if I say all yen pairs are going up, that's generally risk on. So I would also be selling US dollar as well as selling Japanese yen. And then if I was having just a crazy, ridiculous day and the markets are moving beautifully, maybe I'm in a few Swiss franc trades, but I'm also short Swiss franc. I'm short US dollar. I'm short Japanese yen. And it's all the same trade. Now, it might be long pound yen and pound Swissy and euro yen and euro Swissy and all that kind of stuff. But what I mean by the same trade is it's the same strategy. risk on. In the same way, we just went through a strategy based on a hypothesis of oil hitting the monthly high. So therefore, it's either moving sideways and nothing happens to anything, or there's going to be at least a retracement, potentially a reversal, and therefore any oil benefiting currencies will no longer benefit. So I might be long, I might be short 3 Norwegian crown pairs, but I might be short 3 CAD pairs, right? So that's 6 trades, but it's all the same strategy. Therefore, it's all the same thing, right? You see what I mean? So I would be very cautious. I couldn't drop 5 or 10 trades on all at once because I haven't confirmed that I have the right strategy. Okay. Now, if it took you days to throw together that portfolio of trades, well, okay, that's better. And it's not surprising you're getting knocked out then. If you remember, on Friday and on Sunday and on Monday, I forgot who asked the question now, so I don't know if you're in the swing trading group. But I was very, 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 very clear that we were tiptoeing into a very mediocre trading week, and I would not be aggressive. And one definition of that is I wouldn't put a lot of trades on, right? Because my confidence level in a trend is actually quite low, right? So I wouldn't put 5 or 6 trades on quickly. Now, if I was very confident in a trend and it was clearly there and I had volume and volatility behind it, I might be more aggressive on entering, and maybe I would take 5 trades before all 5 are profitable. But I'd have to be aggressive, and I'd have to have the right market for that and all that kind of stuff. So generally speaking, all the way around. Generally speaking, in market conditions like this, you shouldn't be that aggressive where you're in lots of trades and none of them are that profitable, or they were a little bit profitable and now they're coming back to break even and all that kind of stuff. Therefore, if you find yourself in a situation where you have the wrong strategy for the current market conditions, you're better off at probably just weaning out small losses or small gains and reset. If you're confident in your positions, but you just don't have a lot of room left between you and your stop loss, thin the herd. I don't know. So I think the bigger question is, how did you get in this situation in the first place, right? Yeah, Ian, I believe we talked about pound Kiwi on Monday. Yeah, so if it's not trending, just walk away, I guess, right? Oh, how do you predict the mediocre market? Yeah, it's technical analysis. That's what technical analysis does. So you use technical analysis. I'll open up this and I say, okay, this is pound Aussie based on technical analysis. Is it trending up? Is it trending down? Or is it trending sideways? Done. That's what we do. So for example, okay, if this was doing this, I'd be aggressively bullish. Okay. Is it bearish now? Not on this 4-hour, but it's not, it's not bearish, but it's not bullish either, right? So I'm less confident. We're halfway in our range. It's actually been trending down for a while. Should I be bullish or should I be bearish? Well, a bearish trend would have to be lower than this low. We're not there yet, right? You see, like we're in between. So should I be aggressive or should I be conservative? Should I be confident or should I lack confidence? How should I treat this? Well, I see this like bears are definitely playing this out. Brooke, you're very bullish on interesting. Okay, I'm going to disagree with Brooke on this. I'm not, okay. If I was bullish, we would have to be above that. So I can't even consider Brooke until we get this. Let's see if I can do the colors. I can't even be bullish until I see this roll over. Okay. So, yeah, I feel like we're a long ways from that. Okay. But, okay, right? But, here, I'm trying to turn this stupid thing on. I won't do it off. There we go. All right, so it's not bullish now, and that's all that matters. So we can go with Brooks' hypotheses that this is bullish, which is fine. It's just not bullish now. But you can create contingency plans. What would make it bullish? Okay. Well, what I just drew for you would be one example. Another example is, what if it just keeps going all the way down to here, right? And around halfway through the month, we hit that target. Can I have an up strategy now? Can I look for reversal patterns here? Yeah. So typically, right? Typically, I'm going to look for reversal patterns here, and I'm going to look for reversal patterns here. In particular, in plan B. So we'll call that A, and we'll call this B. The other sort of thing is I prefer a plan like B to occur before the 15th, on or before the 15th, right? Less than the 15th. Okay. Ian, they agreed on October like 2 hours ago. Dude, you guys are behind. Come on. I'm in America. It's still early in the morning. You guys are talking about stuff that happened 2-3 hours ago. Come on, guys. Okay. So do you see? So like I never really disagree with anyone's strategy, because your strategy is as good as mine. My hypothesis is as good as your hypotheses. So now it just comes down to technical analysis to confirm or deny like the timing and price of the entry, right? So if this suddenly goes like this, I don't see why it would. I don't see any technical reason for that to happen until we're down here. And this price is a lot less meaningful than this price to me based on pivot point theory, right? So it's like, well, if for whatever reason there's some Aussie news, there's some CAD news, maybe there's some dollar news, who knows. But whatever, if somehow it just decided to pop up like this, then yeah, you could buy a dip into here and play it that way. That doesn't seem likely. It doesn't seem probable. Monday, I would have been hoping for that, but we didn't get it on Monday or even Tuesday or Wednesday. Now it's Thursday. Like, I just don't see that happening. But if it happened, I'll take a shot in here. Okay. So what's more likely is it's going to come all the way down here. And I don't know if Brooke is wanting that. That might destroy Brooke's idea. But for me, if I was a bull, that would be where I'd expect my plan B to occur. It would just go, okay. And that's just trade planning. That's it. So we don't know if we're right or wrong. It's just, right? And can you see, like, in this situation then, I'm basically neutral. here I'm more up, and down here I'm more down. So somebody asked earlier, like 5 minutes ago, like, well, you know, how do you create this how do you know if you should be a bull, bear, or neutral? I'm like, well, that's technical analysis. Okay. First thing you should ask every time, and you got to train yourself. I definitely do it, and I probably have trained myself. I open the charts. The first thing I think of is it up, is it down, or is it sideways? Right off the bat. I don't care what time frame, because it could be down on the 4 hour and it could be sideways on the 15-minute, right? MS1? Yeah, okay, so you already did it, right? You already did it? You did it in here. Oh, you took this one. Okay. That's fine. Yeah. I see it. I see it. Yeah. Bad luck. Yeah, bad luck. Shoot, too bad. You know, I guess here's what it was, and depending on which move you took too, you might have taken the earlier one. All right, if you took this one, perfect. Excellent trade. Then when somebody sells this, you got to remove your confidence, aka jam your stop. Okay? Because we know bulls are going to buy here. We know this is an up. And you buy it, suddenly you're super confident. It's doing everything you want it to do. And then you're thinking, well, if we can just get through this price right here, we're on the free and clear plan, and we're going to be hitting monthly targets by the middle of the month, right? But this is the exact price you would have to say, if that holds, my confidence level deteriorates, right? Can you imagine, like, I almost see it like a war movie, like the army, the small army still inside the castle is setting up the perimeter and setting up defenses, and they're getting their catapults, and well, I guess it wouldn't be a catapult, but anyways, they're setting up perimeters around their castle and all this kind of stuff, and they're setting up all their defenses, and they're going to survive attack. They're feeling really confident about everything, right? And they're like, man, we know the bears are going to attack, but we're going to be ready, and we're going to win, right? And then you're standing right here, and the bears attack, and your confidence wanes, just like the blood runs out of your face. You're like, oh my God, there are so many bears. It's unbelievable how many bears are attacking our forward. Oh my God. So like when you see bears attack from here, it's a big attack, man. It's big. It's big. So I would have maybe jammed my stop and just, I don't know, nothing more to do than pray. It doesn't hurt to pray. Okay. Now, if you took the second one, I see it, and unfortunately, it's like fool's gold. But one of those things is you may have recognized what is happening. See, like in the first shot, you don't know, and you're very confident. It's like a true love, right? It's perfect. But once you see this, your confidence level should drop, especially if we dropped all the way back here, because you know this was created by bears. Bulls bought this. Bears sold into it with confidence. So now you should be like reluctantly bullish, and you get the perfect setup. Like this is a perfect long, but you should anticipate here and here, right? And then even there is a giant sell zone. So once again, I'd say I wouldn't be so confident again, right? And by not confident, I mean, how do you manage your stop, and when do you move it, when do you don't move it? Well, those are all confidence levels, right? So like Brooke did the right thing here, buying here and putting a stop here or here. Okay, that's actually how you do it. That's the textbook, straight out of the textbook, right? So what I'm suggesting is once you see this, like clearly bears got involved, I'd say, well, if I was confident and I wanted this to run, I'd leave my stop down here. But when I see that, it might be in many, maybe not all cases, but maybe in that kind of situation, you move your stop from here up to break even. Because by the time you add all that in, your actual entry, you probably got in more like that. Okay, that's how it goes. Typically, I would not move this until we were above here. Okay, so now your second shot, what if you entered here? This is much more difficult for me because I see confident bears here. And this is definitely a sell zone on the moving averages. This is definitely a sell zone on the pivots. It's definitely a roll reversal. Like, there's definitely bears here. Definitely bears. Doesn't mean it can't come back alive. So the question is, like, on this, and again, Brooke, I'm not saying you did anything wrong or anything. I want to make that clear as well. I'm just kind of going through, like, the psychological process of how to, I don't know, how to roll with the punches, so to speak. This area is definitely different than this area. So if your actual entry is in here, I would probably almost day trade this first. Yes, 21.55. Yeah, okay, cool. We're just talking it out, Brooke. And by the way, thank you for making yourself open and vulnerable because other people will learn from our conversation, right? So I appreciate that. So anyways, we'll call this option 1 and option 2, or trade setup 1, trade setup 2. They're both longs. They're both at same pivots and all that. I would have taken one fairly confidently, and I would have been confident up until this point. This one, I would not be so confident, and I might need a better reversal pattern. See, this one I might just take simply because it's perfect, or nearly perfect. It's exactly what I would have wanted if I was a bull and pound Aussie. I don't know if I'm a bull and pound Aussie, but if I was, I'd be quite confident until this point. And setup number 2, I would not be confident because I know it's a bullish price, but I know bears are in the game. I know there's a well-trained army. And in that case, I need an advantage, right? I need an advantage. I don't want to fight a well-prepared army. I want them to sleep in the dirt. I want them to starve for a few days. I want to take the higher ground. I want the sun to be behind my back and in their eyes when I'm fighting. I need some sort of advantage. And the advantage is, in this case, I'm going to need a reversal pattern. And I need it on this pivot. And if I don't get that, I'm probably going to take a walk until I get something close to that advantage. Okay? I have to see the higher highs and higher lows. At least a double bottom, higher high, higher low. I'm going to look for a 1, 2, 3 in this case. This case, I'm going to be more aggressive. This case, there's enough information to say, you know what? I need better confirmation. Okay, and that's that. So are you saying it is the right time to buy now? Absolutely, totally, unequivocally not. Right on, Brooke. Yeah, so I don't think it's a mistake, but in the sense that, I mean, I don't know, did you enter 1 or did you enter 2? Where did you enter, Brooke? 1 or 2? Which setup? Last week or this week? Well, thank you, John. Yeah, John, I remember you came in and you were more of a short-term trader, and I'm like, hey, please be open-minded to longer-term trades or medium-term trades, I think is how we termed it. And then it seemed like, you know, right? Yeah. And then it seemed like we were close. You were showing up every day and stuff. And it seemed like we were friends. And then it seemed like I rubbed you the wrong way. And all of a sudden you were not friends. And I was a scumbag. So I'm glad you're back and everything's cool. And I appreciate that. I'm just, yeah. So I'm a little bit surprised, but like, welcome back. No blood, no foul, no harm, no hard feelings. But cool. Honestly, I thought, right? Yeah, we all do that. That's cool. Well, I'm glad. Well, I hope. I hope I'm not a scumbag, anyways. I like to not think of myself as a scumbag. Cool. So anyways, yeah, you're in here? Ew. You did a Friday front run? Really? Cool. Well, anyways, John, thinking about it out loud, I'm glad neither of us are scumbags. How about that? Right? Just like our mama said. Can you imagine your mom, the brand new mother holds up her little baby for the first time, like, oh, this is going to be a scumbag. Nurse, can you take this kid away? Right. All right, cool. Anyways, we worked it all out. Right on. So anyways, that's interesting. That's too aggressive for me. I couldn't do it after this. I just couldn't do that trade, Brooke. This one could definitely suck you in if you're still aggressive. And the thing is, it looks easy now, like, oh, well, you know, this was too aggressive getting in. At the time, the moving averages were way back here when you pulled the trigger and stuff. And the funny thing is, the human mind is so funny. We call this confirmation bias. When you're so aggressive, like you're certain this is going up, we tend to not see this either. And you maybe entered here and then that didn't work out and you do it again here and you're just like, you just know it's going up. And it's funny how the mind works and you won't even see this. And you'll like, there's no way there's a bear here, right? Well, of course there's barriers. There's bears there. So it's really funny. I can see this as being real fool's gold because remember, again, the moving averages were over here. They weren't here when that happened. But at the very least, we need to say plan A was we were supposed to be up here. So why the heck are we down here? It could still double bottom, but instead of the stop, let's say 80 pips away, maybe my stop's a lot closer. Or moving averages have to cross, or we need more than a rally. We need at least a double bottom higher high, whatever, right? And we got to get in the habit that if the first plan failed, right, and I consider this as a failed plan. If you were buying at M2, you were going for M4, way up here. So if that didn't happen, we're back at M2, something failed. You see what I mean? If the first plan failed, we need to temper our enthusiasm and look for better confirmation. Because remember, our number one goal is to not lose money. Our number one goal is not lose money. You're not allowed to lose money. You can make a mistake like this is a good trade and the market lied to you, right? The market lied to you. You didn't lose any money. So this one now you have to say, well, hell, if they're lying to me, I'm going to need some proof. I'm going to need some proof. Okay? And you might enter here, but you probably won't enter here. Okay? So we got to get in that habit. Okay, guys? Okay? That's all. We just got to get in the habit. And sometimes that takes a lot of work. Sometimes it just needs one bloodbath. I just get sick of this. Here's what I get sick of. And probably why I tend not to do this as much or if at all anymore. I hate this stuff. And I've found analyzing other people's trades. So Brooks, like, stop is jammed. No, you wait, right? Actually, stop's jammed down here, right? So now you wait. I hate the waiting, but also it becomes like the frog in the pot, and the water is getting hotter and hotter, but slowly. I hate that. I hate that. I hate that. So on the second one, I wouldn't have the same swing strategy. And I think I mentioned this. I might go day chart. So right here, right? We know this is a weekly and a monthly setup. Technically, it's there. It's weekly and monthly. I don't really care. All right. So let me shut this. Okay, good. And then I'm going to change this now to daily. I know strategically the plan is still valid. Okay. So we need this to go bullish today. And if so, we might take a bullish trade tomorrow. So this is the bullish entry this morning, or actually last night. This is M2, so your target's here. Good. Do it. You see that? Now, based on moving averages, this is hardcore bear. This is hardcore bear. Hardcore bear. So I hate wanting to be long, right? But if that's the trade plan, do it. Not us. I'm talking to the market now. Okay, market, if you're so gosh darn bullish, prove it. Now that gets us to the 55. What does that predict, guys? If we actually went from here to here today, what does that predict now? Yeah, Hootie. Well, you have to. I like to talk that way because it gives me the psychological feeling of being in power, right? Yes, correct. Double bottom. So that means we can expect this now or this. So anyways, these are going to move up. If that occurs, this is going to move up. So anyways, I can start doing this now, right? No, 55 predicts double bottom. Okay. But remember, we have a weekly strategy. We have a monthly strategy. I'm just folding in the day. Basically, it's price action that I'm asking for. Okay. I'm like, okay, if this truly is a bottom of a bottom, because the other one's over there, then I need to see this first, and then I'm going to buy probably like in here. Okay. And then we're on our way up here. And we're golden. Okay. So it's just psychologically, I'm trying to teach you how to, and we did this actually in the swing trading group on Sunday as well, how to use technical analysis to confirm market conditions, and then how to adjust your expectations accordingly. Cool. There's the CAD. That's interesting, right? So do you see this trade plan? Why did it not work out as well as we thought? That was the trade plan. Because this is a sideways market. So this is why I don't like sideways markets. Now there's a time to expect them. So back here, we may not have expected this type of scenario. There are other times of the year we do expect it, and I call it shooting at rabbits. And we do this for weeks and weeks and weeks. We just shoot at rabbits. And so rabbit stew, boiled rabbit, braised rabbit, baked rabbit, rabbit à l'orange, rabbit sandwiches, rabbit jerky, right? You get really used to rabbit. But anyways, the market's not trending, and this is what happens. Double bottom, higher high, triple bottom. Mediocrity. So based on this entry, if we were trending, we would expect to be up here. I don't expect to be up there. I'm not even convinced we're going to get through this. And if then I'm not convinced we're going to get through that. Sometimes you can't trade it all alone. You trade all the time. All right. Check it out. Somebody had a big line there and said, that is a bearish sell zone. Very nice. Oh, why the shooting at rabbits? Because we lose volume and volatility. So you have to change your trading style. Yeah. Well, but that's where you'd expect it, right? Yeah, I always laugh at these things too, right? Remember oil, and it's Libya, and blah, 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 blah. Parables. Was that Monday's conversation? Parables. Oops. Yeah, Simpleton. It was Simpleton. Conversation with Simpleton. Wow, Simpleton, I am clueless about price behavior. Huh. Wow, that's bold. It has to do, Jonathan says, why is volatility continues to decline in Forex? Well, it has to do with maturity of the market and the number of players. So there's less gaps, if you will. And it's harder for any one person or institution to push. Like someone said, Bitcoin jumped $1,000 a couple of weeks ago because of one organization. Well, there you go. That doesn't happen in Forex anymore, right? Okay. Oh, the next resistance is here. I already drew that a while ago. But anyways, here's the areas. Of course, we've already done this, right? But let's mark it up. This was a support zone. You can see I've already marked it up. I hand drew these things for you guys. And then this is the sell zone. Okay. We had talked about this being an M2. Oops, I was trying to draw that so you can read it, but let me try it again. This is an M2 to M4. Well, this whole zone here is the sell zone. So we talked about this even maybe on Sunday, and I think again on Monday, that if you were a buyer at this point, this is where you should get out, especially in a sideways market, because you're not considering it a trend, right? How do you set up your daily pivots? You switch them. So let me show you. Well, delete. Okay, so for any person that's downloaded my chart templates, here's what you can do. You go to indicator list. Well, first of all, let me clean this up so it's exactly the way it looks when you install my template. Okay, so this is what the template would look like. We have monthly and we have daily, right? So how about it? We did daily and weekly instead. So now I got to find the monthly and change it to daily. So you go to indicator list, and this is monthly. So now you change it to daily, 1 day instead of 1 month. And there you go. Those are today's pivots. Okay. So when you zoom in, what this tells you is, well, let me ask you something. If you were a bear on gold, yesterday, okay? Yesterday you were a bear on gold. What pivot point would be exciting for you to consider selling? All right, I'm going to say this one simpleton because I've been really nice to you. But when you say things like you're here to fade Wayne, then you don't sound like you're on my team. So either contribute to the conversation in a positive way and collaborate with everyone here learning, or you can just piss off. I think I'm clear. Participate with the group as a team in a collaborative manner, in a positive way, or I'm going to kick you out of my office. So join the team or leave. It's as polite as I can be. All right. So M3. Thank you, guys. You got it. So here's the M3. This is the price. This is London Open. Okay. And this is the daily target. So that's how to day trade, guys. Does that make sense? Nice little day trade. Your stop is all predefined. Okay. So again, the standard, if you've taken the course or read my book, or even I've published articles in magazines, I've posted things on FX Street. So you should know that this is your entry and your stops right here. Just the exact way that Brooke did his trade the other day, right? There was an entry and the stop is really clearly defined. It's automatic almost. And then once you get going, the big question is like, when do you move it to break even? That's all. And that's a subjective thing. That's not a mechanical thing. Okay. I don't like to limit in. I don't like to limit in. I like pulling the trigger. It's just, I don't know. It's just me. It might be because when I first started trading, your orders were not connected. Okay. So limits were not connected to stops and such. Working orders and market orders and stop orders and limit orders. And they're all individual orders. Sometimes they're good to cancel and all this kind of stuff. It was not only much more difficult back in the day. It was very dangerous because it was quite common that you would accidentally leave an order, like a stop or a limit. You would accidentally leave them in the market. Because remember, your charts and your trading platform were not even connected. You know what I mean? So it was very difficult. And so I think because of that, I don't tend to limit in. I can't say I don't, but I tend not to. Okay? Yeah, well, the thing is, you know, the mistake would be, you'd log in one morning and find out you're like negative 300 pips on a trade. And you're like, what? I never took that trade. Back then you'd call the desk. I'm like, hey, there's something wrong there. I'm in a trade and I'm losing money. And I know I didn't take that trade. And they're like, well, actually 6 months ago, you put in a limit order and it was never canceled. And blah, 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 blah. And finally prices come back and, well, we put you in. You know what I mean? Very, 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 very dangerous. So anyways, that's where we are. So that's a day trade, guys. That's a day trade. So that's I've been teaching people that day trading strategy for 15 years or something. That's pretty basic, right? And like I said, there's 4,000 videos associated with my work on YouTube. And the vast majority of them are based on a daily swing like that. Right? That's and then of course I repeat that. So this is a day trade, but also it's the same thing for me on weekly trades and monthly trades. I mean, I've been doing the same thing for 15 years. You know what I mean? They're all the same thing. Moving averages, they're there to measure speed and direction of the market. It gives you an idea like how confident you should be, how aggressive you should be. It can give you the current direction of the market. So you might be doing this on a 5-minute chart, which is fine. So on a 5-minute, direction and stuff, but your strategy is on these higher time frames. That's why that's why I've always done strategy first. Right? And go back to the story that I've told many, many times where I'd spend an hour a day doing calculations on a spreadsheet, which was me devising a strategy. Okay? And then I opened my charts and I started using tactics, technical analysis, to enter the strategy, right? And that's what this is. So I'd have a strategy. If you were already a bear, you knew that was your price. You knew this was your target. Right, so let me clean this up. If your strategy was already bearish yesterday or the day before or last week, last month, whatever, it doesn't matter. If you already have a strategy in mind, then the tactics are quite easy. So you knew without even looking at this chart, right, you want to sell at the daily M3. And down here would be your target. So do you know you're supposed to take profit now? Well, that's what these are telling you. And that's what you knew 24 hours ago. Well, not 24 hours ago, but this is like 5 p.m. yesterday, New York time. So, it's only not even 9 a.m. here, right? So, it hasn't been 24 hours, but you knew this yesterday afternoon. And, right? And then you get a little Asia price action. You get a little London open shot in the dark, right? And then you get a little reload. Great. And now you're here. And you already knew way back here that this is where you get out. So if I was day trading and I was short here, and I find myself here, I'd take profit on these 2 trades, wash my hands for supper. Done. MoveOn.com. Okay. Get out! Okay. Yep. Yesterday's trade plan working. Kicking off the old central. Very nice. Looking at things, right? You guys remember at the end of the webinar yesterday, I did like 5 trade plans in 5 minutes. This is one of them. We had Euro CAD going up, remember? We're blazing through this resistance now. It's just yesterday's trade plan working. So again, newer traders, or let's say most retail traders, they're trying to figure out what to do now, okay? And what we did was yesterday, right? You remember this? Yesterday, we said this would be going up. And some people are just maybe on the clue train now, but they're chasing all of this, in here, trying to make their yellow Lamborghinis. Pedro wants me to elaborate what I did on spreadsheets. Well, back then, I had a couple of trading accounts. One was FXCM, one was GFT. So it was my GFT account. And back then, again, there were no charts. When you open up a brokerage account, there was no charts. You had to pay, I think I paid $150 a month for charts, But when you placed a trade on your trading account, you don't see your trade on the chart. It was just the chart. So they're very separate things, right? Two different applications and everything. But anyways, when you got into you had a window kind of like this. And here's bid and ask. And you can add some spread and high-low, and right, you can add some different information. I don't know why that's important, but whatever. So one of the things on there was like, I think it was percent volatility. And it was a positive or negative number. And it told me, I think, it never, of course, it doesn't tell you what it's actually measuring. Like, okay, volume, or I mean volatility. Over the last 24 hours, over the last week, over the last month, over the last year, like volatility of what? It didn't define it. It just gave you a volatility number. So I called them. I'm like, so what does it mean? Volatility of what? And they're like, nobody knew, of course. So it was some sort of random number threw out. But anyways, for every currency pair, it gave what I assumed was the overnight volatility or the volatility over the last 24 hours. But I'd come in and starting a new trading day, I'd look at things. And to me, this was Asia Open, right? So this is like Tokyo Open. I'd go to my chart and it would have percentage vol and it'd be a red or a green number. And so it would have one for USD Swiss franc, pound USD, euro USD, USD yen, USD CAD, so on and so forth for all the currency pairs, obviously. And what I would do is I would create basically indexes or indices of these. So I'd look at dollar versus everything, input the percentage volatility for every dollar pair, and then flip them around and all that to get congruency so that I'm isolating the dollar versus, let's say, 8 different currencies. The US dollar versus 8 different currencies. Was it, when you flip everything around, was it volatility up or volatility down? Did the dollar strengthen versus everybody or weaken versus everybody or sort of an average versus everybody? But then I do that again for the pound. I do the euro versus 8 or 9 different currencies. I do CAD for 8 or 9 currencies, Kiwi, just everything. And I'd have to manually do this. And I had a spreadsheet, so I created a nice big spreadsheet. It took me a whole day or something. And then so every day I would pop in the volatility numbers by hand. And then it would spit out relative strength based on overnight volatility. So did it move a lot versus the pound and a little bit versus the euro and hardly anything versus the yen? Or did it move a lot versus everything? And was it up or was it down? So I could say, wow, the dollar lost versus practically everything. So dollar's weak versus everything. So I want to be a bear on the US dollar. So anyway, so I do all of that and create a relative strength. And then I would rank them from the weakest all the way to the strongest. So I might find the US dollar relative to everything else is the weakest currency on the planet overnight. And that the New Zealand dollar is the strongest versus all other currencies on the planet overnight. And then everything somewhere in between. And then what I would do is I would look at the two strongest, or the weakest versus the two strongest. So I'd do pound, right? Let's say dollar Kiwi, pound Kiwi. And then the second one might be yen. So so I'm long Kiwi or whatever. And I create pairs. And then back then, spreads were actually extremely high. If you pick the wrong pair, you might give up 20% of your profit or something. So anyway, because back then my average profits were only like 25, 30 pips, right? So I didn't want to give up like 9 pips of my profit because of spread, right? So anyway, so then I'd take them through spread analyses and find out which pairs were most affordable to take the trades. And I'd get down to a situation where I wrote it down. I had a pre-printed sheet and everything where I'd write everything down, and it would say buy USD Kiwi yen, right? Kiwi dollar, Kiwi yen. Buy Kiwi dollar, Kiwi yen. So dollar is weak, yen is weak. Great. Then I open up my chart. I haven't even looked at a candle yet. But I know strategically I'm a bull on Kiwi dollar. I'm a bull on Kiwi yen. I might consider Aussie dollar as a second play, and I might consider Aussie yen as a second play. So I know exactly what I'd want to do on what currencies, and then I would open up a chart and use technical analysis. Okay, that's what I did. But I still, in many ways, do that using a different methodology, right? Obviously, but that's what these scans are, right? I can look, and that's why I do things like, you notice this? I do like pivots yen, pivot dollar. Because if I open up this, or if I open up, like, the yens are perfect because they're all denominators. If I see they're all up, boom, 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 I'm buying all these. Boom, 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 boom. Okay. Hoodoo says, I have to practice that way. Well, but see, that's what I've been teaching in many, many ways over all these years, is that if you're opening a chart and looking for a trade, you're going to find one, but you don't know what you're doing. You're shopping while you're hungry. You're going to buy anything. Right? You have to start with strategy first. And that's what I did 1,000 years ago when I was teaching myself how to trade. I taught myself strategy first, and then I used technical analysis to enter my trades. Okay? And imagine, though, when you're opening your charts, you're like, okay, where's the trade today? Oh, I guess it's going up now, right? When you're doing that, there's a guy like me that has spent 24 hours planning his trades. I'm going to win. That's how I feel mentally. I have the skills and I have the plan. I'm going to win. So go ahead, trade by the seat of your pants. Someone is going to have to pay for my Harvard bill. Right? I used to say someone's going to have to put my kids in college. I'm in college, so someone has to pay Harvard. It ain't going to be me. It's going to be some trader that's winging it, trading on the seat of his pants. Woohoo! Guess we're going up now. Boom. I'm going to destroy a trader like that. Not because I'm smarter or better, maybe better looking, but because I have a better plan. And I've worked harder for my plan. And gosh darn it, I deserve it. Because I worked out a better plan. So like I said earlier, if I find that there's a well-prepared army, equally equipped to battle me, I don't want to fight. I need to look for a strategic advantage. I need the higher ground. I need the enemy to sleep uncomfortably for several days and starve for a few days. I want the sun to be setting behind my back, so as they're fighting me, the sun is in their eyes, and they're fighting uphill, and they're tired, and they're hungry. In those situations, I'll probably win because I have the advantage. And to me, in Forex, my advantage is I'm prepared. I'm very prepared. I'm extremely prepared. And I'm not bad at what I do. And I'm getting better. So anyways, hey, peace on earth. May the pips be with you. May our profits be above average. Thank you for being a collaborative member of our team and of our group and of our society. And all the hard work you put in. It's truly a team of positive energy, but also of focused energy. Right? There's more, you need more than positive attitude in this business called Forex. But working together makes this grind so much easier. So thank you for being in my life and supporting each other. I love the fact that today someone needed help and like 9 people volunteered to help them. That's really cool. That's what I want to be a part of. So thank you for being in my life. That's really cool. Yeah, well, Yeah, make sure you pay it back. Make sure you open an account at Traders Way. Even if it's a demo account, just go do it now. Download my templates and all that kind of stuff. And then realize this is going to be blood, sweat, and tears for years. And hopefully I wasn't bitchy today. I tried to get more sleep. We're all struggling to improve, right? So I don't think I was bitchy today. So that's good. All right. So, hey, like I say every day, please subscribe, please like, please comment. And hey, there are other videos. Feel free to watch them. In the video description below, you can download my chart templates. There's lots of resources I've made available. Thousands, 4,000, almost 5,000 videos on YouTube for free that show how I've been trading Forex for the last 15 years. So please take advantage of them, and I will see you tomorrow. Cheers.